Good afternoon, ladies and gentlemen. Welcome to our special edition of Market Gurus, where you get to meet fine individuals who've traversed this bull market, this volatility with and momentum with aplomb. Our guest today is a gentleman from the mutual fund industry, Mr. Feroze Azeez. He's the deputy CEO at Anand Rathi Wealth and has been helping individuals, ultra high net individuals as well as retail people make tons of money by his excellent choice of funds. Apart from that, Feroze also holds a very strong and very good views on the market, and it's always a pleasure to welcome him on Business Today Television. Good afternoon, Feroze, and first of all, happy Ramzan.
Thank you so much, Shail sir. It's an honor and pleasure always to interact with you.
Okay, so Feroze, like always, what we'll do is we'll break this show into two parts. People are very anxious to know what to do with their fund holdings at this point of time when there is an extreme bout of volatility after a fabulous run up all through 2023 and the early part of 2024. And of course, we'd like to take your view, your understanding on what's happening in the mutual fund industry, which is, flush with liquidity. Every single fund manager, I'm sure, has a problem of plenty these days. How to put in thousands of crore rupees that are coming in as a systematic investment plans. But let me just address the main elephant in the room, and this very sharp downturn that we are seeing in small cap funds, mid cap funds, and of course the thematic PSU pack. If you look at data in the month so far, thematic PSU funds are down 7.8%. Small cap funds are down 8% on average so far in the month. How do you see this volatility?
Yes, Shailji, firstly, I think the fall is a good correction because it is correction on the basis of the of course, there has been talks about the stress test, and the stress tests are out, and there was a certain degree of euphoria. Money making had become too easy in the broader market, and the liquidity was not just chasing on one count in the form of domestic institutional liquidity. We had the mutual funds getting so much money. We had the retail also making so much money with a lot of demat accounts opening, and they were also pumping in money largely into small caps. And then you had FIIs also over the last couple of years became very interested in Indian small cap and mid cap stocks, which they never used to be with this kind of confidence. So all three cylinders were firing, is why you had pockets of extreme re-rating and extreme valuations. Now with NSE 500, 34 companies in NSE 500 were quoting at greater than 100 Ps. 160 or almost 2/3 of NSE 500 was quoting at Ps greater than 70, 75, which is a large valuation jump. But so point is, the regulator was rightly concerned. If the whole cycle were to continue, and then the falls would be very astronomical, which will make sure all the new investors will go away forever. So the regulator said it's better to have a speed breaker than a car crash. So that's where I think we are.
Absolutely.
8% fall is okay.
Okay. So I'm just trying to get a sense from experts like you that these kind of sharp erosions in prices are par for the course for categories such as small caps and mid caps, because we've seen them happen earlier, and it's the fund manager's responsibility to ride through this volatility with the good picks and a decent profit taking at whatever time suits him. Is that right?
Yes, Shelji, I would say yes. But the beauty of a mutual fund investor is all these markdowns are momentary unless you act. If you don't act on a fall like this, the markdown is momentary. See, if there's a stock crashing down, you never know. There are some stocks which have never come back to their 52-week highs. There are so many stocks which went down under, got delisted, they don't exist anymore. Name a few funds which this has happened to. The fund no more exists. So for a mutual fund investor, coming back to the highs is a certainty. It is the question of when. So if you don't chirofy, as they call it in a more colloquial lingo, it will automatically come back. But that can't be said for every stock in this country, right? But can be said for 99% of the mutual.
Absolutely. And that's the reason why at Business Today Television, we make it a point to, talk more about fund investments rather than individual stocks, because as Feroze says very clearly, all highs in the mutual fund business are taken out, and that cannot be said for individual stocks. Some of them just disappear. Feroze, my apologies. Please continue. You were trying to say something.
I'm so glad and excited to see that stock investing is definitely a different ball game. The kind of research is far, far different, and mutual funds definitely for a person who has chosen another profession other than capital markets. His only, to my mind, sensible alternative is mutual. Right? Coming back, I was very surprised when I was looking at three-year pockets of how many times does Nifty fall more than 10%. And for the last 3 years, Nifty fell more than 10% 12 times. That means once every quarter on an average, Nifty itself falls 10%. The previous 3 years, Nifty fell 10% 13 times. सो मार्केट गिरने का बहाना जरूर ढूंढ लेती, ऐसा नहीं कि एक साल में एक बारी, क्वार्टर में एक बार 10% गिरती है. तो दिस इज द वर्ताव ऑफ द मार्केट. An investor, before he cuts his check, needs to internalize this information and then cut the check.
Yes.
And not just small caps, but also Nifty, which is the largest index in the country.
Okay, so ladies and gentlemen, for all those of you who are worried about your fund investments in mid caps, small caps, and especially thematic PSU funds, please be rest assured, as long as you don't do anything to it, the likelihood of previous high being taken out in this industry, in this segment, in this structure of product is far higher than it is in any equity individual stock. Okay, so that's one big worry out of the way, Feroze. Now let's see the good parts of your industry. I'm sure you're delighted with the kind of inflows that are coming into funds on a monthly basis. A record this time of about 22,000 crore rupees a month as far as monthly SIPs are concerned. Where do you see them headed? Where is the maximum money coming in? And what do you think is the trajectory from now on?
I think if you look at the inflows this year, on the SIP front have been phenomenal. Okay, and they've reached close to 20,000 crores. And fortunately, we had called this out that it will reach 25,000 crores when it was as little as 5,000 crores a month. Because the reason why this time around you're getting that kind of SIP numbers is because from 2013, several business channels, SEBI or AMFI, all of them have spent a lot of energy, time and money on investor education. The investor education initiative was started in 2013. So this time money is not coming out of greed, but it is coming out of education. That financial services may aapko invest karenge, so you will be able to meet your objectives. Earlier, SIPs used to come in bouts. When past performance was good, SIP would shoot up to 7,000 crores a month. And when past performance looks bad, it will come down to 3,000. This time, this has not happened. So that's one. So good, sensible, education-driven drive has brought in money, which is more solid rather than greed-driven. That's point one. Point two, 1,97,000 crores has come into mutual funds net. Purchase minus redemption over the last 12 months, which is a good number. But there is a problem with the dark cloud inside the silver lining. The dark cloud is as follows. If you leave the SIP number aside, Shailji, I was very disappointed that lump sum purchase minus lump sum redemption is negative 18,000 crores. मतलब अगर SIP के पैसे ना आए होते, lump sum purchase minus lump sum redemption is minus 19,000 crores. So largely HNIs have not put in too much money in equity in a year where we are sitting at almost the peaks of the market.
I would imagine, Feroze, that would be explained by the year-end tax considerations where, ultra HNIs like to book out on gains and then maybe offset some kind of short-term losses. Overall, I think that's an annual phenomena that you see. But yes, I do appreciate the fact that that might be a warning light of the markets having peaked out at about 22,000, 22,500. Also, the fact that a lot of selling pressure has come in from all sorts of quarters. So, well, let's just say, it gives you something to worry about at a time when everything is in party mode, just as you would be late evening in a iftar party. Be that as it may, let's look at some other parts, Feroze, of this wonderful picture that's in front of us. Two broad trends that we are dealing with in the financial markets are the financialization of assets, as also the shift that is coming in from time deposits towards mutual funds. How have those trends been in the last 6 months to 1 year? And do you think they will get stronger from now?
Yes, I think if 6 months to 1 year has not been able to be in a very small, it's a reasonably small period of time to establish trends of a big elephant of household savings. If you look at last 11-year data, there is evidence that financialization is happening. If you look at the Indian household savings totally, okay, the interesting part is India has 743 lakh crores, give or take, of Indian household savings. There's only about 4% to 5% in equity of this 740 lakh crores in the form of direct equity and mutual fund equity for individuals and households. So when we in our shows say 50% should be in equity, 60% should be in equity, all those are so academic if you take it at a bird's eye view of India, and there's only 4-5%. In spite of just 4-5%,
Okay.
you see stocks getting re-rated with some degree of liquidity because India has very little free float. The 300th company in India, as per free float ranking, is only 7,000 crores free float, right? So in India, a country like this can only go through financialization without creating bubbles if there is enough supply of great companies with amazing free floats in the country. Otherwise, Indian households can never participate in equity in a rational fashion without creating bubbles and subsequent falls.
Okay, Feroze, since I have a little more time that I have spent in the market compared with you, you are really young, and I'm in my last 1/3 phase of my career. I just want to say that the terrible times that I have seen in terms of next to zero equity participation, the current environment is much more welcome, and maybe 10-12 years from now, or maybe 15 years from now, when you are my age, you'll see a far more vibrant Indian equity market than what it is now.
आपके मुंह में घी शक्कर शैल जी.
देखिए, मेरे को जाके लंच करना है, अभी आपका जो व्रत है वो चल रहा है, तो okay, ladies and gentlemen, now comes to brass tacks. Feroze analyzes mutual fund data in a very unique manner. Basically, what he does is that he will suggest funds that are complementary to each other, which essentially means that large parts of the individual portfolios of the funds that he suggests are different from each other. So you don't have a replication of the same theme or the same, how should I say, asset class over the mutual fund portfolio that you hold. Feroze has picked 5 funds for us today. So Feroze, what I suggest is, let's get cracking with 5 names one after the other. First, tell us what should be the allocation in the 5 funds that you talk about, and then sequentially we'll go after each fund. If you could just name those 5 funds at one go, and then one after the other we'll discuss them. Over to you.
Shailji, for the sake of simplicity, I'm going to say 1/5 in each of these 5. That's how I would want to make it, rather than making it a little more complex by having different proportions into each of them. DSP Equity Opportunities, HDFC FlexiCap, Kotak Multicap, SBI Contra, and Invesco India Small Cap. They all come from 5 different categories. And this combination is also tested for the underlying market cap allocation of 50-55% in large cap, 25% in mid cap, and 20% in small cap.
Okay, fine. So now you understand the mathematics that's going behind in Feroze's brain. So you have 5 separate categories being taken care of by one fund each. And when you see the breakup of these funds, the overall corpus, everything put together on those 5 schemes, it has a higher allocation to larger cap. Wonderful. Now, Feroze, let's get into the allocation. Do you want 20% into each fund and an SIP setup subsequently in these fives, or how would you suggest a lump sum purchase now or a simple SIP?
I think if you have a long-term opinion on the market, I would say lump sum, given the fact that there's election around the corner, okay, and the kind
Okay.
of influx of money from foreign capital when status quo is maintained. Foreigners love status quo. That's what evidence is. If the government were to continue, irrespective of the government, FIIs love continuity. So the kind of influx which can come in may leave you out of the market if you just try to stagger it for 6 8 months, is my belief. That's point one. So you should go all in,
Okay.
especially with the 4-5% correction in the broader market we've seen. And yes, 20% each is what I would say. And SIP is also into these same 5.
ओके सो पांचों उंगलियां बराबर हैं, सब में आपको 20-20% डालना है, लेकिन अगर आप एक झटके में पैसा डालें तो फिरोज जी कह रहे हैं वो बेहतर होगा, क्योंकि हो सकता है कि ये जो बाजार करेक्ट कर रहा है इसमें आप ज़्यादा खरीद पाएं और मई 15 के बाद, सॉरी 4 जून के बाद शायद आपको वो मौका ना मिले. सो फिरोज जी, विच इज़ द फर्स्ट फंड दैट यू वुड लाइक टू डिस्कस? शुड वी स्टार्ट विद DSP Equity Opportunities Fund?
Yes, Shailji, DSP Equity Opportunities is something we should start with.
Please go ahead.
Yes. So it is a large and mid-cap scheme. Large and mid-cap schemes are those which, as the name suggests, have more into large cap and some portion also into mid-cap. So this fund is about a 10,900 crore kind of a fund. If you look at the target NAV of this fund, see, one is the NAV which is flashing on the screen, which is 534. Our research team actually computes what is the target of each of the stocks inside the portfolio, and for those stocks, what is the target NAV after a year. Of course, the target is not cast in stone, but if 534 is the current NAV, and if the target NAV is significantly away from 534 and higher, then it is automatically going to be scored better. So the target NAV of this fund is good, which means that the future is brighter. That's one reason. Second, what happens is the fund also has a concept where we try and see the lead indicator of future performance using a concept called regression. On all those 11 parameters, it fares very well on 8 parameters, which is a good score. And its target NAV also being very good is why I would say this is a good large and mid-cap category fund you can have in your portfolio.
Okay, so most of the most basic data that is there on this fund has been shown on the screen. The others that I'll mention is that about 75 stocks are spread over in a set of about 10,900 crore rupees. And the top names as far as the fund portfolio is concerned is ICICI Bank, HDFC Bank, SBI, Power Finance and Axis Bank. What is really interesting is the fund manager of this scheme has in the month in which he has reported this portfolio, he's added to 4 out of his 5 top picks, which means that he's bought fresh into ICICI Bank, HDFC Bank, SBI and Power Finance. More details we'll be adding on our Twitter handle, on which I'll also add Feroze. So DSP is done. Which is the second one, Feroze, that you have in mind?
HDFC Flexi Cap would be the second one. In the Flexi Cap category, as the name suggests, which is an old fund, and it's one of your favorite funds as well. I know that. I think so. Yeah, that will be the next fund, and I think Flexi Cap as a category has a skew towards large cap, and the flexibility being enormous, especially in a market where there's so much turmoil with respect to small cap mein kya hoga, mid cap mein kya hoga, giving full freedom to the fund manager, which is what a Flexi Cap does, is a very, very good thing. And the kind of performance on a base like that, almost 50,000 crores, and still the kind of alpha generation Alpha generation, which I mean, it's not just the excess return.
Yes.
There's another method to calculate alpha that's called the Jensen's alpha, which uses a regression method to identify the alpha. I would say this fund has generated Jensen's alpha, which is how globally people look at alpha. There also, this fund has scored beautifully, and that's why I think it will be a second fund for my recommendation.
Okay. As Feroze rightly mentions, this has been one of my favorites, and I'm almost, Feroze, very embarrassed to say what my purchase price was. The net asset value, ladies and gentlemen, at the moment is 1,700 rupees. This fund, the regular plan of HDFC Flexi Cap Fund, which was earlier called HDFC Equity Fund, was launched in January of 1995. I'm really embarrassed to tell you that my first purchase on this one was 14 rupees, and I still have it.
Amazing. That's the kind of
So
wealth creation.
it's been 100. Yes, it's been 100 bagger. In fact, more than 100 bagger, and I generally don't refer to it because it becomes a bit embarrassing. But this is the kind of wealth, ladies and gentlemen, you can create a CAGR return of 19% each year for the last 29 years. Should there be somebody who has the first allotment of what was HDFC Equity Fund, I'm sure he's a crorepati many times over. So that's HDFC Flexi Cap for you. The word flexi suggests that the fund manager has the entire flexibility to invest across asset classes in terms of market capitalization. And that is one of the biggest advantages that flexi cap funds have. We've discussed two. DSP equity opportunities and HDFC flexi cap. Let's get on to the third one, Feroze. What catches your fancy?
Kotak multi-cap. Now going to the next category, which is a little more straight-jacketed, a
Yes.
little more restrictive from a fund manager standpoint, because the fund manager is expected to put 25% of his money or her money in each of those, large, mid, and small, and only there is a flexibility of 25% of the residual. Kotak Multicap was a small scheme when it entered into our model portfolio. Of course, we try and test it from a future standpoint using statistical predictive analytics tool. When it was just a 2,000 crore fund, we got it in the portfolio. It has outperformed even small cap funds. Kotak, of course, has big funds. Away from the Kotak big flagship funds, Kotak Multicap is actually one of the funds which has the potential to give you future return. In fact, in our model portfolio, there are two Kotak schemes, Kotak Emerging Equity and Kotak Multicap. Kotak Multicap is the best scheme for this financial year, and unfortunately, Kotak Emerging Equities is the worst out of our 14 schemes. So it is not just the choice of the fund house which is important, it's also the choice of the scheme which is important on a yearly basis, and that's Kotak Multicap. And we think that its performance can continue for the next 2-3 years very easily on the relative basis.
Okay. So Kotak Multicap, ladies and gentlemen, is a new kid on the block. This was launched in September of 2021, and with about 9,006 crore rupees in assets, the returns since launch have been about 21.5% CAGR. Interestingly, the thing that I'd like to mention on this one is that there are, I think, 68 stocks in this particular fund. Yes. And if you look at the kind of stocks that Kotak has, you'll be very pleasantly surprised. And this is where Feroze's wonderful intelligence comes in. Look at the top 5 stocks: Maruti Suzuki, Hero Motors, Hindustan Unilever, Power Finance, and Oracle Finance. So the fund manager is thinking very differently when it comes to construction of portfolios. In fact, this is a rare fund where I don't see a bank in the first 5, 6, 7 stocks, and that speaks volumes about how differently the fund manager is concerned and is thinking. So a great pick here, Kotak Multicap, ladies and gentlemen. I'll also give you one wonderful data on this one. If you had invested about 2,40,000 rupees over the past 2 years, there would have been 3,50,000 rupees a return of about 39% CAGR. This is, of course, 2,40,000 would have been in a monthly SIP of 10,000 rupees each. So that is the kind of fabulous returns that even new funds are giving. Three are done, Feroze. Which is the fourth one out of your hat?
Now that we've gone through capitalizations, the next chronological order would be Invesco India Small Cap Fund, which is a small cap category fund, which we believe is managed by the CIO himself, Tahir Badshah, a small scheme. I think in small schemes in a small cap fund is very, very critical because the agility. Now, if somebody has to sell 2 lakh shares of a certain share on a day when he needs the money, it's very different than selling 30 lakh shares of the same stock. So small funds in a small cap category are more agile. And Tahir Badshah is a great fund manager. So I would vote for Invesco India Small Cap 20%, in spite of the carnage we've seen over the last few days in the small cap space.
And Tahir also happens to be a dear friend of mine. I'm sure you will be bumping into him in some iftar party or the other, which a lot of stockbrokers do in any case. So it's a small cap fund. And as you can see, it also has a very different kind of holdings as far as the fund is concerned. There is Global Health, there is Credit Grameen, and over the last 5 years, it has ranked itself fairly well in terms of the overall number of funds that are there in this space. As usual, if you had put in a 10,000 rupee SIP 5 years ago in Invesco, those 6 lakh rupees would have converted themselves into 12.5 lakh rupees. The amount has been doubled. The fifth and the last one, Feroze, I'm sure you've held back the best for the last.
Yes, absolutely. And now that we looked at categories on the basis of market capitalization, we finished those 4. So SBI Contra is the fifth one, which, as the name again suggests, that reminds me how mutual funds have made it so simple for a recipient that the name itself tells you half the story. So it's contra, it's contrarian. It is not going to be with the Bedja, a herd mentality, as we call it. So it tries to do something different. Dinesh is the fund manager, very bottoms up stock picker. I think contra as a principle is always good to put in a portfolio so that you have some degree of shock absorber in your car when you have. So SBI Contra has now become a large scheme. It has been in our model portfolio for about 2.5, 3 years. It used to be a 5,000-7,000 crore scheme back then. Now it's about 26,000 crores. And I think this performance of SBI Contra relative to Nifty may continue, and it has a reasonable exposure to large cap in spite of having a contrarian approach. That's why an old fund, but back in the flavor over the last 5-7 years. And I think that this can do justice to one's monies.
And one of those marquee schemes that have done phenomenally well, ladies and gentlemen. Again, a 10,000 rupee SIP over the last 5 years. Those 6 lakh rupees would have netted you 13 lakh rupees. The money's doubled. And if you look at the portfolio, that again is fantastic. The regular plan for this scheme was launched in July of 1999. And between 1999 and 2024, which is about a span of 25 years, each year the fund has compounded by 19%. So these are the kind of returns that you get without lifting a finger, without moving an eye, and without doing any of the heavy lifting. All that you have to do is maintain your SIP even if you book profit at upper levels, which essentially means in a market like this, in which you have sharp bouts of volatility, markets fall, your SIP fetches you more number of units at a lesser cost than it would have at a peak. Unfortunately, retail investors try and time the market by buying the top and regretting to sell at the bottom. Now, the beauty of mutual funds is, the beauty of indexed based investing is that all these are compounders over the longer term. So any dip in the market is an opportunity, like it is now, to put in an extra SIP. And these are the 5 funds that Feroze has suggested. Backwards, we'll repeat them for you. SBI Contra Fund, Invesco Small Cap, we have DSP Equity Opportunities Fund, we have we have HDFC FlexiCap, and we have, of course, we started with the DSP Equity Opportunities Fund. The last question to you, Feroze. A lot of people ask me that an NAV of 1700 rupees and an NAV of 17 rupees, what is better? People presume that the fund that is for 17 rupees will appreciate faster than the one which is at 1700 rupees, provided all things remain the same.
Yeah, if all things remain the same, NAV is in a mutual fund absolutely irrelevant from a choice, to help you make a choice at all. Because if there was limited supply of units, then NAV would have been important. See, in stocks, the free float, the number of stocks are limited. Now, if I remember our company's number of shares outstanding, 4 crore 18 lakh odd. Now, there is a limited supply in a stock. But in a mutual fund, the number of units are not frozen. If tomorrow, if somebody at 1700 rupee NAV fund brings in 1000 crores more and says, I want to buy this fund, the fund manager or the trustee of the asset management company will give him 1000 crore worth units by printing new ones. So 1700 or 17 will not influence the return in the future. It will remain identical, and the performance of the fund will only depend on how the fund manager delivered in the portfolio, and NAV will be a variable which will have no significance whatsoever because of unlimited supply of units.
Right. Thank you so much, Feroze. And as usual, happy Ramadan. And we hope to meet you soon again. Thank you so much for your time, sir.
Thank you, Shail sir.
Okay, that, ladies and gentlemen, was Feroze Azeez. He's the Deputy CEO of Anand Rathi Wealth, and he made a portfolio of 5 equity funds for you, which will be available on our Twitter handles. Thank you so much for your time. I hope you enjoyed the show as much as my PCR and I did. Thank you.